All right, everybody, with volatility at all-time lows /VX, well, recent lows at least, trading 1735, down another 1% today. Complacency abound in the equity markets. Something's percolating in the metals, and I'm not talking about gold. I'm talking about silver /SI up over 4%, $60.77.5, up $2.37. Silver, it is a very large product, tens of thousands of dollars for points. But you know what? You can make it really small by going into SLV. It's the same exact thing, acts the same exact way, but it takes it down to $100 a point. Volatility is good at 72%. It's actually come in ever so slightly. If you look over the last 10 days or so, the last 5 days, volatility up 7.9%. I digress. I was wrong. I thought it was up around 10, 11% at one point over the last 5 days, but maybe I'm wrong. Up almost 8%. Good high implied volatility. Good price high, about 30 cents off its highs for today. But you notice that silver trades just like the equity stocks that you're used to looking at. $100 a point. 50 cents is $5, just exactly the way you look at it. So what am I going to do here? Well, you know me. I'm a contrarian. This is up at new time highs, all-time highs. I am going to get a little bit shorted, but I'm going to do it in an intelligent way. I'm going to sell. I'm going to do a reverse Jade Lizard. I'm going to sell a naked call and a put spread. I'm going to sell a pretty close at the money put spread. I'm going to sell the 54.52. That's a $2 wide put spread, trading for around $1. That's about half the width of the strikes. Seems interesting to me. Markets are a little bit wide here, so you got to be careful on your pricing. I mean, when you're selling an out of the money put spread and you're getting more than almost half the width of the strikes, you would think that you'd have to go in the money with your short and out of the money with your long to get. So that spread's trading rich to me. At least that's the way I'm looking at it. And I'm going to sell an out of the money call with call skew. You would think that the out of the money calls are going to trade rich. Look at this. So the 58 call, which is about $3.50 away from the money, is trading for around $2.10. $3.50 out of the money, you're looking around the 51 strike, and it's trading for around $1.50, $1.60. So I'm selling expensive calls relative to the equal distance away put. A put spread that I think is expensive too, and I'm getting, I got $3.18 as my total credit on this trade. Now the markets can be a little bit wide at times, so this is trading 307. The natural's 316. The natural bid is 299. You'll look at this trade. It has a 78% pop. I'm doing this, closer to 45 days, 38 days out in January. I'm going a little bit closer. You only have a $2 wide put spread here, and yet I'm selling an option for over $2, which gives me $3 and change in credit. That's my max profit, $307. Usually, or if you wanted to, you can go all the way out to something like the 60.5 if you want to, have less directional risk. You'd be short 19 deltas. I'm taking more directional risk. I want to be short more. I'm short 27 deltas, $4 in theta decay, 77% pop. Chance on making 50% on this trade is about 56%. Uses a relatively small amount of buying power on the overall trade in a portfolio margin account like we have here. Again, selling the 54.52 put spread, selling the 58 call. If you want to see this trade before you're watching this podcast, all you got to do is go to the follow page, go to the bats. That's me down on the bottom. I always put the trades in here. You'll notice I sold it at 320 and 316 for an average price of 318. Like I told you, I am at full size now. It is a short delta, reverse Jade Lizard. Here's the strikes. You can see that in real time. I did this at 10:12 this morning. I did it when the stock, let's take a look at this. The stock now is trading 54.72. It only moved 10 or 15 cents, and you can see that that spread has come in a little bit. Again, it has delta to it, 27, 28 short deltas. So if this moves $1, you should be out around 28 to $30-ish, depending on what volatility does. If it goes down, you should make $28 to $30-ish, depending on what volatility does. All right, everybody, you want to be able to do this in an IRA account because you can. At Tasty Trade, we can sell naked calls in an IRA account. It's going to use more buying power. Maybe you want to go and define the risk by buying a far out of the money call. But you could trade any option strategy, futures in an IRA account, futures options in an IRA account at Tasty Trade. Find out all the details by transferring your account to Tasty Trade, or just click on the link and read all the fine print. Or call us up. You can do that too. Help us keep the lights on here at Tasty Live, all this content.